So I have a huge problem that I need to figure out how to solve. So I'm going to share this with you guys in this video. It involves taxes as a self-employed individual. But I'm going to share this with you guys in this video essentially because my assumption is there's a lot of other people that are dealing with this, but I don't hear many people talking about it. Now, I already have a potential solution to the problem that I'm having right now that I'm going to share with you guys. But my eyes are open and my ears to the ground for a better one. Okay, so I'm still searching around personally, like checking with people and talking with people to try to find the information that I need. If any of you guys listening to this video that are about to listen to this video have figured out a way to overcome this tax problem that self-employed people face, please let me know down in the comments. If you're dealing with this same problem as well, let me know down in the comments. Again, my assumption is a lot of people are dealing with this. Everybody knows that as an entrepreneur, you have more ability to control your taxes. And everybody knows as an entrepreneur that what you gross and what you actually net, the difference between what you make overall and what you earn after you pay out your expenses. Everybody knows that, that's a huge difference. And most people know that you're taxed on the difference in between what you make and your expenses, right? You make $200,000, you have expenses of $100,000. Most people know that you're going to be taxed based on $100,000. So what most entrepreneurs attempt to do, and what I've done for so long in my life as an entrepreneur is to lower my tax bill. I want to take as many write-offs as I can. I want to get my taxable income down as low as possible so that I don't have many taxes to pay. From what I gather, most of the entrepreneurs, most of the self-employed individuals, the owner-operators that I talk to, that I deal with, most of them do this, okay? They make a certain amount of money. They have a bunch of things that they can write off, and they write off as much as they possibly can to reduce their tax liability. And just, a side note, I was doing some figuring today and looking over all of the different taxes that I pay as an entrepreneur. Not all of them, but a lot of them. The ones that, I just kind of thought of that I know that I've been paying since I've been in business for myself, and a few of them that I pay even before I got in business for myself. So if you look at what I've got put up on your screen right now, this is a list of all of the taxes that I jotted down that I'm currently paying as an entrepreneur. And these are also the taxes that employees typically pay. These are the taxes that people that work pay. Now, there's probably a few on here that I didn't include, but even though there's some on here I didn't include, you can see that there's 8 different taxes on here. Medicare is Social Security tax, which as a self-employed entrepreneur, that's what an employee pays, Medicare and Social Security tax. A self-employed individual pays self-employment tax. It's basically the same thing. There's also state income tax that we have to pay. There's federal income tax that we have to pay. There's property tax if you own property, if you own real estate, which I don't own, but I do own my own truck. I do own my own vehicle, so I have to pay property tax on that. Fuel tax has to be paid every time we get fuel, every time we put fuel in this truck. There's highway use tax that I've had to pay. And there's also sales tax. Every time we buy something out here on the road, we pay sales tax, right? So I've got some percentages drawn up as well. And when I added up all of these percentages, I came to the conclusion that 27 to 30% of our income as workers, generally speaking, this is what is going back. This is what's going to the various taxes. Social Security and Medicare tax as an employee is 7.65% of your income. If you're self-employed, you're actually paying both sides of that. So you're paying a little bit over 15% in self-employment tax, which is Medicare and Social Security. 5% of your income is going to go to state tax. Federal tax ranges, depends on your filing status and your tax bracket. Federal taxes go as low as 10% all the way up to 37%. So I just figured this out at a conservative 12%. Like, you're going to pay these taxes if you're making money in America, or if you got, a really strategic way of eliminating your tax bill. You pay, we pay 27 cents per gallon fuel tax. That's in the state of Virginia. That depends on what state you are in. I got property tax figured in at an average of about 1%. You know, depending, from what I read, homeowners pay 1%, and a vehicle, personal property tax on a vehicle is, I think I read that it's $4 for every $100 of assessed value. So on my truck, if I value my truck at $10,000, that's $400 in personal property tax I'd have to pay every year. And then there's highway use tax, which is a little bit over $500 a year. And then there's also sales tax. If you total all of this up, I've come up to a conclusion of about 27 to 30% of my income is going to taxes. And like I said, what most self-employed individuals do, because we do have control over our taxes, is we have the ability to mitigate our taxes. We have the ability to mitigate our tax payments, to minimize how much we owe to taxes. The problem that I'm having is, and this is where I would like, you know, some comments on this particular subject, is as a self-employed individual, when you reduce your income so low that you don't owe taxes, or maybe even that you get a tax refund, you're actually going down on paper as not making any money, which is a problem, which could be a problem if you go to get something financed. I want to buy a house next year, and the underwriter is going to be looking for, because I'm self-employed, they're going to want 2 years of my most recent 2 years tax stubs, my tax papers. They're going to want to know my adjusted gross income for the last 2 years. And if I've reduced my income to an amount that's low enough where I don't owe any taxes, what the underwriter for buying a house is going to do is he's going to average out my last 2 years of income. And that is what they are going to attempt to get me qualified for a mortgage based on. And so if last year I reduced my adjustable gross income to $30,000, and the year before that I reduced it to, let's just say, $25,000, then they're going to try to get me qualified on a mortgage based on the average of those 2 years, which, just for simplicity, would be like I'm making $27,500 a year, and that would be the income that they would try to get me a mortgage based on. And if you know anything about buying a house in America, like, you can't get approved for much of a house with income that's that low. So what I'm planning on doing right now is just bellying up to the bar and being ready to pay taxes on a higher amount, because I don't want to reduce my taxes so low that it knocks me out of contention to be able to qualify for a house next year. So I have to report income this year, which means I'm looking at having a really, really high tax bill unless I can figure out a better way than what I'm going to do to lower my tax bill. I've looked at possibly being taxed as an S Corp. I haven't found out all the information that I need to know on that yet. I know that I had 75 days from the day that I started my LLC to elect to be taxed as an S Corp, and I'm past that 75 days now, so I'm not sure if I could still elect to be taxed as an S Corp this first year. I got a lot of things that I'm not really sure about on this issue, but as of right now, I'm just putting away enough money to make sure that I've got enough money to pay my tax bill at the end of this year. But I would hate to have to pay $30,000 in taxes, man. I really would hate to have to do that. So you guys that are, you know, I make videos on this subject sometimes on my channel, and I often get comments from people that'll say stuff like, hey man, you get a good CPA, they can wipe out your tax bill. And people throw that out so brazenly that I'm like, well, okay, if you reduce your tax bill, your income enough to eliminate your tax bill, how do you solve the problem that doing that is creating? And every time I see a person throw that in the comments, I'm like, I wonder if they know that you know what I mean, that this is a problem that exists when you do that, or they're just saying that because they've always heard, get a good CPA and they can, you know, as self-employed, you can reduce all your taxes. It's not really that simple, right? It's not really that simple. So this is the problem that I'm having. As I as I come up with the solution for this problem, what I like to do on this channel is I give as I get. So being that I haven't come up with a really, what I would say is a really good solution for this problem yet, I can't really share. I can't really share it yet. But after I get the solution, which I hope to have one by the end of this year, I hope to have one sooner than the end of this year, because if there's something that I need to be doing right now, then I need to be doing it right now, not waiting until the end of the year to find out this is how you should have been operating throughout the year. So if you're going through this and you figured out a way to solve this issue, speak on it down in the comments. Let myself and anybody else know that is having this problem or is going to run into this problem because they're planning on writing off everything that they can. Let us know down in the comments how you've managed to solve this problem. Maurice Bay, the Helpful Trucker here. For more helpful CDL tips, go here or consider subscribing to my YouTube channel right here. You could have been anywhere else in the world, but instead you chose to be here with me, and I really appreciate that.